calamity that has hit Ireland. It's a shameful episode of 10 years, 4 of them that have happened since 2008 and 6 leading up to 2008. I think the banking sector overall, not just here, abroad, everywhere, has been disgraceful, has crushed households, distressed them, distressed and crushed businesses, indigenous businesses, and I can explain mathematically how you did it. The weighted average of loans to deposit ratios, and unfortunately the media don't understand this, loans to deposit ratios are the centripetal prudential force of a bank's balance sheet. And if bank boards waver off that, they're actually endangering the deposits, they're endangering deposits, and they're actually going to lead towards a financial collapse if they do it as a sector. Yesterday's AIB Chief Executive David Duffy reminded everybody here that a mortgage is a loan secured on an asset. And if the banking sector has for 6 years cumulatively abandoned the prudential principles of keeping loans to deposits at 90% and a fractional reserve of 10, then they have created the credit asset bubble. And how dare a banking sector think that they're entitled to collect all the loan secured on the asset which they helped to pump up consistently for 6 years. That's wrong. That's why Deputy Higgins is correct. That's why Deputy Donnelly described that it is wrong that the loans are manufactured and recalculated over a longer period. Now I'm going to switch to your own thing, because there should be a concerted effort by the 2 big banks. They're zombie banks. The households are crushed. You're still a zombie, and I'll show you how. Because if you go to page 10 of your loans and provisions, and there's nothing personal in this, I'm just superbly frustrated for the last 5 years at the denials of the truth of the situation. You have a loan book of 95 billion in 3 main categories and a little one called consumer. You have provisions of 8.1 billion on 95 billion. That's 8.5%. The sister bank with a loan book of 88.9 billion has 17 billion of provisions, or 18.5%. And they're the same size as your loan book, probably not unlike the geographical dispersion, in the same economy, with the same roughly numbers of employees, and you're saying to yourselves you're 2.2 times better than AIB in terms of what's collectible. If you rerun the provisioning, and I'd suggest that you do a 15% provisioning on the 52.2 residential mortgages, a 10 on the 22.5%, 22.5 billion of non-property SMEs, and a modest 25% on the property and construction loans. You come up at a figure of 14.68 billion of required provisions, and you've only got 8.1, which indicates you need 6.5 billion to 7 billion of more capital. And that's why people like Fitch and Moody's are saying the banks are undercapitalised. And that's why, if you did have the right capital, you'd get on with the job of recalibrating households and businesses to what their incomes, their maintainable, reasonable incomes, will be able to service. That's what's needed. And you're right, Deputy Higgins. You were right when you told Barroso that it's wrong for 70 billion of private sector losses in an economy by speculators, and that's the right word technically to use, the people who put money in. You know how much you guys had in March 2003 in senior secured debt on your balance sheet? Sorry, March 2009, you had 45 billion, down from 61 billion in March 2008. So, you know, the huge arrival of speculator, high-yielding bond guys got out. And they got out with the help of Central Bank of Ireland advances and ECB advances. And that's why I say, Chair, that it's very important that the people who understand this and who ought to understand it, and if they don't, and if they're reluctant to understand it, we have a national concerted effort needed to get the country out of the hole, to drain the swamp so that normal economic activity can start again. And yes, it's about 60 billion for the Eurosystem. And the pro-no no 29 billion or 27 billion that was recently refinanced by a series of 40-year bonds. That was a sham. There was no negotiation. That had to happen. There was no chance that Ireland ever could have borne an 11-year profile of 28-ish billion. Never. So it wasn't even a question of asking for it. We were given it. We didn't even ask for it. You know why? Because our establishment figures in the form of the Central Bank Governor was a co-author. A co-author of the programme.
Deputy Mathews, please. Thank you very much. I don't know if there was a question in that, but I'd like Mr. Butcher to respond.
The Deputy